Welcome. Welcome, everybody. Welcome to The Law, Your Money, and You. I'm Roberta Saphire, an attorney in Sharon, Massachusetts, New England.
Yes, and I'm Camille Barron, a healthcare advisor and financial coordinator, also here in New England. And Roberta, we have one of our favorite guests returning today. We're going to be talking about some of the latest developments in the financial world. Mainly, there are three actually. We won't get to all of them today, but we know that inflation is very much on people's minds, the stock market volatility as well. But first, we want to just chat a little bit about cryptocurrency, because a lot of folks are just asking, what the heck is this? And what should I know about it? What's Bitcoin, and all kinds of questions. So we have someone who's going to enlighten us on some of these topics.
Yes, and Cliff has been with us since the beginning, and we're going in our 12th or 13th year. And from all the different things that we've had, functions and things like that, where we've had speakers, they all love Cliff. They all have it's not just what he says, it's the way he says it's the way he delivers it. So welcome, Cliff. We also be lovingly known as CC, because it's Cliff Caplan, both with a C. Go for it, Cliff.
All right, so cryptocurrency. So let me just start by saying I am not an expert in cryptocurrency, but I have certainly done a fair amount of reading and research to be able to at least give your viewers a a general overview about what it is and what it isn't. I guess maybe it's equally important. So it's probably important to talk a little bit about how it started. So cryptocurrency was sort of a response to what we call fiat currency. Fiat currency is the currency that's issued by governments, okay? And there's been a concern by many economists and others over the years that the paper that currency is written on is not really worth worth anything in the scheme of things. It's backed by the government, of course, but what's it really valued at? And that that take has been taken to another level with all the stimulus that all the checks, the stimulus checks, the federal unemployment, the infrastructure bill, all the money, all the dollars that have been printed by the Treasury in response to COVID. It's sort of enhanced their view on this stuff. So, of course, the first cryptocurrency was Bitcoin, and that's still by far and away the most prevalent. But there's others. The second largest, which is dwarfed by Bitcoin, is Ethereum, and it has a few things, a few issues about cryptocurrency. First of all, it is done. The transactions are completed between a buyer and seller. It circumvents and is not monitored by the Federal Reserve, by the Treasury. As a result, early on, and some people would say even currently, and in fact, with the Russian oligarchs trying to hide money, there's a thought that they're using cryptocurrency as well, but it avoids scrutiny, and a lot of criminal activity was transacted through cryptocurrency, and that was the sort of the common thread early on. One of the other attractive features, getting back to my issue about fiat money, is that it has there's a finite number of Bitcoins. In other words, they can't print more Bitcoins, and that's attractive because it sort of establishes the value of, well, I don't know if it is, we'll talk about that. It doesn't really establish a value, but at least—
Excuse me, I got to interrupt you. I got a question which a lot of people ask.
Right.
You can't see it. You can't touch it.
It's digital. You're exactly correct. It's
digital. So why not make up something other? Or maybe that's, see, in my mind, it's all made up and it's a good public relations type.
So do you remember a year or two ago, Elon Musk was in the news because he's buying Twitter, promoted Dogecoin, which was the latest iteration of cryptocurrency. And he admitted, I think on Saturday Night Live, where he was the host, that it was basically a joke. And it plummeted, I think, the next day. To me, cryptocurrency does not have any intrinsic value. At least currency issued by countries is backed up by the economy of those countries, and basically you're banking on the faith just of the market itself. Now, a lot of financial institutions are jumping on the cryptocurrency bandwagon. For example, and I think this is a disaster waiting to happen. Fidelity is indicated they may allow Bitcoin to be put into to be an available investment in 401k plans. Now, we need to talk a little bit about volatility. A lot of people have called Bitcoin or other cryptocurrencies digital gold. So Roberta, to your point, it's not tangible, it's digital. But the fact of the matter is the volatility on this is tremendous. I think Bitcoin I think it topped out at over 50 or 50,000. I think it's what is it, around 15 or 20. I mean, it's dropped precipitously. You know, a lot of its proponents look at it as a storage of value. Well, when you experience a 50 to 65% decline, if you bought it at the wrong time, I'm not so sure it lives up to that definition. So the other thing about Bitcoin, which is getting a lot more, or just not Bitcoin, but cryptocurrencies get a lot more play right now, is the fact that the people really making the money on this are the ones that implement the trades. Okay. And it takes up, and this I'm not aware of, but the computer power and the impact on the climate, on the environment is substantial. So the biggest users of cryptocurrency, so happens, is in China, and it's apparently a specific region of China. And these computers are spewing out all sorts of fumes or whatever else that have a significant negative impact on the economy as well. So there's a lot of issues. I forget how many types of cryptocurrencies are there. But again, Bitcoin I think represents over 90% of the value. Ethereum is a distant second. To me, it reminds me, viewers that are followers of history, reminds me of the great tulip fiasco that occurred in the Netherlands of 300 or 400 years ago, where the price of tulips, of all things, was bid up to astronomical levels. Now, at least tulips, per your comment, Roberta, are tangible. You can touch them. The problem is they do die at some point. And you know, eventually that whole thing crashed and burned as well. We may, and we'll talk about this in connection with the stock market and inflation in a minute, but there's a possibility that crypto might be, well, first of all, I think there was a bubble, but it might be experiencing the beginning stages of a major meltdown. Okay. Now, again, it's too early to make that call, but I've just not been able to really wrap my arms around the real value of this. But it's what they call them miners. It's the individuals that actually, who are computer savvy, that actually go in and make these transactions on behalf of two parties who basically make like a commission. And they're the ones actually getting rich on this stuff. Okay. I have a friend of mine whose son is is an IT guy. And just a few years ago, he was very involved in this stuff. And he was up $500,000 or $600,000 in crypto in terms of the value. What it is now, I don't know. So a lot of moving parts of this. I am not a proponent. Wall Street is jumping on it because there is so much interest, which is why we're talking about it. But I don't get it. And the offshoot of that more recently have been these NFTs, the non-fungible tokens, which I really am perplexed about. So try to compare. These are, again, digital
assets.
Well, they're digital assets. I'm trying to, it could be a painting, it could be even a tweet, it could be anything where somebody stamps, basically like a patent on it. And all of a sudden it's worth all this money. And I just saw the other day where somebody invested in an NFT for like $2.8 million and is trying to sell it now. This is about a year and a half ago. It's only worth $277. That's been as high as bid. All right. Now, again, that could be an anomaly. We understand that. But for the life of me, I'm scratching my head. People like Tom Brady are doing non-fungible tokens. Again, it's sort of an offshoot of this whole crypto or blockchain technology.
And what about blockchain? Can you kind of explain that a little bit?
Blockchain is really, this is the way it's transacted. I'm not an expert on that. But blockchain is the way
I've heard of that.
Blockchain is the technology that executes these orders. Okay. Again, we're sort of hitting to the edge of what I really know about cryptocurrency, but I've looked at it and I I'm not buying into it. Maybe I'll be wrong, but I am staying away from myself and my clients.
But Cliff, does the value of whatever you have in cryptocurrency, does it ever convert to actual dollars, money?
Well,
Yeah.
it's valued daily, of course, okay? But, we got an interesting point. So when it really was making its way just before the pandemic, there was talk about using it for transactions. Well, that didn't really work. You might remember Elon Musk was taking Bitcoin for purchases of Teslas, all right? There was talk about some pizza parlors would take Bitcoin to pay for the pizza. The problem is that the value is so volatile. It changes, in big swings over a matter of a few days that most have gone in another direction. There's not too many places. Now, there is one country, what is it? I think it's Nicaragua, which has decided they're using Bitcoin as their national currency. All right. And that we'll have to see how that all pans out, because the currency had been in a big decline. So again, its real main purpose is a storage of value. And given its recent decline, I wonder how much value that really has.
See, I just can't buy it even from the beginning. I mean, digital, there are a lot of people that don't do digital. Don't you want a bank account?
Well, there are a lot of people that do,
You want to
Roberta,
see your money.
Yeah, there are a lot of people that do it. But again, to me, it's got to be backed up by something that's tangible.
Maybe
And it
toilet
isn't.
paper, paper clips.
Yeah.
Dogecoin, I mentioned Dogecoin before. Dogecoin took off. It was a new
Dogecoin.
cryptocurrency about a year and a half, 2 years ago. It took off. And in a matter of a few months,
You're in the
the
house.
value of Dogecoin was worth, I think, $50 billion, which represented a value greater than all the stock at GM. Where's the logic in that? Where's the fundamental reasoning? As I said, I don't get it. And I think right now with what's going on in the stock market and inflation, I think, as I said a couple of minutes ago, I do think that it's possible, not likely maybe, but possible that we're seeing a major meltdown in all cryptocurrencies.
Well, yeah, excuse me.
Funny.
It kind of reminds me of maybe there is a similarity, Cliff, when we no longer traded gold and instead printed it on paper. I mean, wasn't there sort of a skepticism around that at the time?
Well, yeah, that, we went from the gold standard back at Bretton Woods 7 years ago, I think under Nixon, if not mistaken, if I remember my history right. And again, that would be an argument, Camille, why cryptocurrency is valid. Okay. That, again, paper money is not worth the.
Read the question.
But again, I go back to the fact that at least, we have a discernible, a quantifiable GDP and there's some basis. You may think the basis is stretched, but basis for the amount of money that circulates. I just don't see that same rationale with cryptocurrency.
Yeah. Well, it's good to know. With that, in the time we have left, we certainly won't be able to cover it in depth, but the two things that most people are very worried about are inflation and the stock market.
Right.
We're planning to have you come back to talk more about those things, but maybe
Healthcare, healthcare.
Yeah. So inflation right now, can you give us any insights about what's happening and why inflation is so high?
Yeah, so I think I was a bit prescient here. I don't always get things right. Nobody does, for that matter. But I could see this wave coming at us as early as February of last year. And the reason I say that, and there's been a couple of things that have exacerbated it, which we'll talk about in a minute. So remember, during COVID, we printed stimulus money to people that didn't need it, like my 93-year-old mother, all right, who did not need it. Not only did laid off workers receive state unemployment, they received, if you recall, federal unemployment of $600 initially, I think until July of 2020, maybe it was 2021, I think. And then they still received some federal unemployment. We overstimulated the economy, all right? There was, the old definition, Milton Friedman, who's a very famous economist, once said the definition, he defined inflation as too much money chasing too few goods. On the demand side, what happened, of course, is the supply chain issues that we all know about, which is now it's bad again because China which is a major exporter, has shut down something like 11, like 10 of their cities. So things have slowed down to a crawl. And so these two factors have really spiked inflation. And as I said, it's been exacerbated by what's happening in Ukraine and Russia. And specifically, we all know about oil. Okay, oil prices have skyrocketed, and of course, we're not buying Russian oil anymore. But what a lot of your viewers might not realize that Eastern Ukraine and Western Russia is the second largest wheat and corn growing region in the world after the Great Plains. Excuse me. And I don't think we're going to get much production out of that this year, given what's going on in that region with the war. In addition, Russia, through their crops, produces and manufactures a lot of the fertilizer that we use, that our farmers in the Midwest use. Well, there's going to be a dearth of supply on that this year. So the crop production may be down in the Midwest this year as well.
Production of everything is down. I went to 3 stores to get whiteout. You buy things, Home Depot, all of them. They say you've got to order online and wait. And everybody's hired. There's another thing that affects the inflation is nobody's working. I don't know why they're not working.
Well, I have a view on that as well. If we can get, maybe not in this segment, maybe in another one. I think that will turn around, and I have reasons for that. And I think it's already starting to see the beginning stages. But inflation is high. I think it came out yesterday as we speak. They expected to go down. It was 8.5 in March, and in April, I think it came in at 8.2. If I remember, they thought it was going to be lower than that. I do think it'll go down, but it's going to be stretched out more because of what's happening in Ukraine and the impact that I just talked about. And it's here for a while. And, a lot of these supply chain issues will get resolved, and that'll help. But it's going to get resolved. Now, what the Federal Reserve is doing right now, we switch gears just for a second to try to contain inflation, is they're raising what they call the federal funds rate. These are short-term rates, but it does influence long-term rates, which is why 30-year mortgages right now are north of 5% in a short period of time. And it's a really delicate balancing act here. Because if they raise interest rates too much, they're going to throw the economy into recession. And so pick your poison. We still have what they call negative real interest rates. Think about it. And what that means, if you have 8.2% inflation and you only have 3% bonds, 10-year treasury bonds, about 3%, that means that you have negative rates of 5% or more. Okay. And so they've got to get these rates more in the positive category. So we have many more rate increases to go. But again, they're sort of, treading a fine line, walking a fine line here because they raise them too far too quickly. Again, it could throw the economy into a recession.
That's right.
Well, if it's a mild recession, it may not be the worst thing in the world. Now, I know it's easy for me to say because in a recession, people get laid off, and we know what goes along with that. But sometimes you need that because a recession would put a lid on demand, and that would help the supply chain issues and would help calm things down. So again, it's a real balancing act here. And the problem is the Federal Reserve, remember they were using the word transitory about inflation for the longest time? A miscalculation, okay?
Yeah.
They've lost that word. And what does transitory mean? Does it mean 1 month or does it mean 1 year?
Right.
All right. So they're late to the game and they're scrambling. And again, the Ukrainian situation, which had nothing to do with anything that the Federal Reserve has done, has just made it worse. So what I think about this with the stock market, and this is a very important point. We've had, in my career, I've been 40 years, we have these market downturns. This is a fairly significant one. The tech stocks are getting really beat up. Not nearly as bad as they did in 2000, but they're getting really beat up. Here's the difference this time, all right? In the past, the Federal Reserve, though they would never admit it, if the stock market had a big decline, they would likely drop interest rates, reduce them, okay? They used to call it the Greenspan put, for those viewers of ours that remember Alan Greenspan, who was a former Federal Reserve chairman. Their main focus right now is to suppressing inflation. And unless the stock market drops 50% or so, I don't think you'll see them take any action to try to prevent a further decline in the stock market. I could be wrong, of course, because I said it's a balancing act. And if people lose 50% of the stock market portfolios, I mean, it's going to have a major impact on spending habits and so forth. But I do think that this is very different. over the last 30 or 40 years, the Federal Reserve, again, starting with Alan Greenspan, never admitted it, but it just was more than coincidental that this would happen. It's not going to happen this time, again, unless there's some precipitous decline, far in excess of what we've already experienced today, up to this point. On today's what, May 11th or May 12th? May 12th.
Today's the 12th.
And so I do think that this market has got a ways to go. Now, there are certain sectors that should have firmed up and will do fine. Consumer staples, commodities, for example, have done great. All right, that's an inflation hedge. Okay, something called TIPS, Treasury inflation protected bonds, are another area. So there are areas that you can put money in, and short-term bonds are another one. One other factor here, which before I forget, I talked about interest rates. The bond market in the first quarter of this year had its worst quarter in at least 3 decades. At least 3 decades.
Absolutely.
And so, yeah, you got to be real careful about where you put your fixed income. There are places to insulate it, but it's a very, very, not only does the Federal Reserve have a fine line to travel, but investment advisors like myself are in one of our most challenging investment environments in many decades.
Is that right?
I want to bring up one thing. This might be May 12th, 2022. It will be interesting to see by the time this makes its way around to the different places that we were shown in 24 different communities. But by the time it gets it, it'll be interesting to see what predictions have come true of yours. And I don't know, people should know that you're a really advisor on this. So you're excellent. You're excellent. Fascinating. It's way over my head.
Well, there are
most of it.
one thing to remember in the longer view, and this will hopefully give some sense of optimism to your viewers. Okay, at some point, this market will hit an inflection point on the downside. All right, and it always does. Now, I don't know when that is or how far it is, but it will. And all you need to know right now is that Warren Buffett has been flush with cash with Berkshire Hathaway for quite a while. He's busy buying companies. He sees big bargains out there right now. And that should tell you something. In 2008, he gave Goldman Sachs a ton of money. Goldman Sachs was in a lot of trouble in the financial crisis and made a fortune for his investors. All right. And plus, that's the most noticeable or visible investment that he made that paid off in a big way. But the fact that Warren Buffett, even at age 91, is deploying cash right now tells me that that there are deals to be had. Now you have to be patient because the stock market is likely to continue to go down for a while. So I don't, again, as I said a minute ago, I don't know what the bottom is, but at some point it does, and then it'll rise suddenly and unexpectedly, like it did in March of 2009 following the financial crisis. And if you want to be there when that happens, okay.
And that's why everybody says, think of the stock market as a long-term investment.
Yes.
You really can't go from one year to the other. It's the long term, and for the most part, the stock market has proven to be a safe, I won't say safe, but it's proven to pay off well for people if they remain committed to it. The thing that is a bit of a challenge is that for people who are approaching retirement, nowadays retirement is, in terms of financing retirement, it's usually done in layers. You have the immediate and then the medium term. And if you're lucky enough to live long, then maybe long term. So for people who are looking at the immediate withdrawals, should they be considering maybe starting with ones that are more cash oriented or low risk oriented so that they wouldn't be quite as affected by inflation right now?
Well, I want to make sure I'm clear in your question. You're saying on withdrawals, do you want to be withdrawing from assets that haven't declined as much, maybe because they're safer? If that's what you're asking, absolutely. Because the problem is, there's been a lot of studies done about retirement income planning. And what comes through loud and clear, we could do 2 segments on this, and I'll try to be brief. But what happens when you retire, it's the sequence of returns that you receive versus the actual average return. Because I can give you 2 scenarios where they each average, let's say 8% over a 10-year period. Scenario number 1, the market drops precipitously. You take money out, that money never has a chance to recover. Okay. Scenario number 2, the market takes off and it declines at the end. And even though they both average 8% over a 10-year period, scenario number 2 is going to look a lot better at the end of that 10-year period. So to your point, if you recognize that, and that's just a matter of math, you're better off, yes, withdrawing from the investments that have done the best at this point. Because if you have a lot of technology stocks, there's a lot of people out there, and they're probably right, just like in 2000. Technology, I mean, Amazon, Microsoft, Apple aren't going away. Meta or Facebook has dropped over 50% this year. I don't think they're going away either. All right. And so you don't really want to be withdrawing your retirement money from those stocks that have experienced these huge declines. You want to leave them alone and give them a chance to recover. So yeah, so you probably want to withdraw maybe your bond funds, even though they've got hit, they haven't done as badly. Maybe if you keep, some dry powder in the form of cash, which a lot of people do, that would be another option. But yes, to your point, you want to take from the least affected investments in this kind of environment.
Absolutely fascinating. So the people who say, oh, I lost 100,000 in the market, they should just wait, not count it every day.
Well, Roberta, first of all, you may be down 100,000, but you haven't lost it unless you cash out. You have to remember that, because these things they do recover. All right.
Fascinating.
Yeah. So,
Fascinating.
I mean, I talk to clients all the time. Some clients, I remind them of this for the last 20 or 30 years, and guess what? They still say, oh, I lost 100,000. No, you didn't. I mean, if you're down 100,000, yes. Until you cash out, you haven't lost 100,000. So
that's good to know. I'll think of that one. Thank you. I'll keep that in mind. And I think we're just about out of time, Roberta. So I think what we need to do now is wrap things up. I think, Roberta, I think maybe you've frozen a moment. That's okay. We can continue. Cliff, as always, it's enlightening to listen to you. Every time we talk, I have more questions because you stimulate the kind of thinking that we all need to do.
Yeah, but okay, go ahead, wind up like you do.
Winding up. And thank you very much for enlightening us about cryptocurrency and also a little bit about inflation in the stock market. Those are areas that we only tap the surface of. And I know that we'll want you to come back to talk more about inflation and the market.
Always my pleasure.
And for our viewers, I'm sure you're going to have more questions. Is it okay, Cliff, if anybody wants a copy of your newsletter on cryptocurrency?
Sure, they can email me. I don't know if you've put it on your screen.
They can email us and we'll email you. We'll forward it on.
Yeah, well, I do. You are on my list, aren't you?
Yes.
I get a copy of the newsletter.
As a matter of fact, some of the issues we discussed today, I just submit. I have to get it approved.
Sure. Who's your broker dealer?
They're that by compliance officer, right? So the approval should happen by early next week. In which case, I'll be sending it out, and both of you, of course, will be receiving it. So yeah,
good.
Absolutely.
Okay.
So a lot of the issues we're talking about today are in the newsletter, as it turns out, because I'm getting questions. I'm getting questions like your viewers are questioning you. So
okay. Thank you very much. And to our viewers, thank you so much for watching today. And let us know if you have questions about this topic or you have any other ideas for future topics. Because remember, this is your show, The Law, Your Money, and You.